Yeah, and welcome to this pre-morning live stream. A heck of a lot has happened since we last spoke. Markets exploded in a good way. And I'm pulling back a little bit today, and I want you to walk away from the next few minutes understanding why what yesterday happened, what it means, what's coming next, and what you should do about it right now. And I was going to put this into 5 points, and then while I talk to Winston about it, there he is. Good boy, Winston. He said, well, you got out a few things. You got out a few things. So this isn't quite as succinct as I thought. It's 9 points. I just couldn't help it. I just had to add to this. So I want you to understand what caused the bounce and why. What's going to happen next and why it might not be what you want. I'll give you a really great big round bottom indicator. And what to buy now, I'll explain the trade war cycle to you because that'll happen a few more times, and that's really, really important. And why gold is something you're going to want to watch, seriously, even if you're not invested in gold at all. And the one thing you need to check one time per day. It'll take you 30 seconds, but it'll tell you exactly what's going on, just like one number. And then I'll give you a little bit of wisdom from a legend because I think that's going to be helpful. And then why buying here might not always work. And maybe there are some things we might want to buy, and there's some things we definitely don't want to buy. So do those 9 things sound like something that might be of high value to you? Winston seems to think so. If it is, put a V in the chat, just a V for value, and I'll see that this is useful for you. So I know there's a sort of information that might be useful for you. Cool. Brilliant, guys. So let me get started, shall we? Should we get started? Should we get started? Okay. Lots of V's here. Brilliant, guys. Thanks for all those V's. Eric writing 9. That also works. Lots of V's. V's. So this is what happened yesterday. The president of the United States wrote that he wrote quite a lot of things, but the key thing here being, I authorized a 90-day pause and a substantially lowered reciprocal tariff during this period of 10%. Also effective immediately. Thank you for your attention, and a lot of other stuff. So the market was like, yay, we get 90 days, we get 90 days, we get 90 days, great, right? But why did he do that? Did he just wake up and thought, I'm going to be soft on tariffs this morning? He just, melted a bit because he's a nice, soft guy at the heart? No. Goldman Sachs, the investment bankers with a golden heart, they're saying the explanation is that the freezing of fund markets drove the Trump pivot is a credible one, which is what I was talking about yesterday. If you joined me then, the bond market almost froze and we had a massive margin call. So margin call on hedge funds. There was a serious risk. We'd have to bail them out. Not a small risk, about just small amount of money, $1.5 trillion. And that would have caused the global financial crisis. And Trump explained to him. JP Morgan's Jamie Dimon went on Fox News because, Trump watches Fox News. He basically said, this is going to cause a recession. So Trump dialed it back to not cause a financial crisis. And this is obviously being swept under the rug because it would also kind of imply that he was sort of causing a global financial crisis. Of course, the hedge funds are ultimately to blame, but that's actually what happened here yesterday. Does that make some sense to you? If that makes some sense to you, put a 1 in the chat. So I know this is landing for you. The explanation works for you. So what happens next? Well, are you a long-term investor or are you a short-term trader? Which one is it? I'm going to ask you lots of questions here. Put an L in the chat if you're a long-term investor. So put an L in there if you're an investor, or put a T in there if you're a trader, okay? Trader or long-term. And that'll determine whether or not you're going to like what I'm about to tell you. Okay, I'm getting some L's here. Long, both. Yeah, okay, that's me too. Lots of longs, but lots of longs. Yeah, okay, that makes sense. And, 70, 80% of people are generally long-term investors. Some of you are both. A couple of you are just pure traders. Okay, most of you are long-term investors. Okay, so when we get a 5% gain in the S&P, like we saw yesterday here, okay, cool. Most of you guys are long-term people. Amazing. I've got something for you in a moment as well. when we get a 5% rally in one day, right? We haven't had that many of them, literally, 20 or something like that since 1950 when the data started. What happens the day after, the next day? Yeah, not that good. On average, we actually go down 0.7%. That's today, by the way. Right? Have a look at the pre-market. And here she is. We're down a little bit. QQQ right now is about 2% down. We come back to this in a second. What about 5 days later? Still not that good. It's about 1.7% down because this level of craziness volatility usually only happens when something bad just happened. What about a month out? Okay, you long-term guys are starting to win. 1.8% up, woohoo, with a 70% probability. So that's a 70% chance of making 1.8%. Not that exciting, right? Let's jump to 6 months. On 6 months, on average, we're up 11%, with also a 70% probability happening. And 12 months later, so now you long-term chaps are winners, and the long-term, we are up 27% with a 91% probability. So if you're a long-term investor, that is good. All you got to do is pick the good ones. That's all you got to do. That's your entire job. Don't pick the duds, right? Don't put all your money in GameStop. That's your only job, really. And I'll teach you that, by the way, on Saturday if you want to join me. We went on a whole session of how to pick the best stocks, because only the best stocks make money. The vast majority of stocks lose you money. So if you want to learn how we do that and how the best investors in the world do that, come and join me on Saturday. It's completely free of charge, felixprehn.org/webinar. And I'll teach you. I'm giving up my Saturday to get people out of this rut and actually become winners out of this crash, because there is opportunity knocking. Bigly opportunity knocking. 27% up in 12 months wouldn't be so bad, right? So come and join me and grab yourself a seat there. 2,000 of you already have, which is crazy. So I think we're going to have a massive live event, which I'm excited about. Now, let me then give you a bottom indicator there. And Juma says, I hope the next webinar is not a sales pitch. Juma, in these sales pitches, in these webinars rather, teach you a ton of stuff for free, give you a huge amount of value. And yeah, if you want to, in addition to learning all that free stuff that I give you, you want to come and get mentoring with us and my team and my mentors who all invest in bankers, you can. You don't have to. It's completely free. It's a free world, right? So why do I offer that? Because I think the best way to learn is always with a coach. That's whether you are learning sports or driving or scuba diving or flying a plane or managing your money, which is the one thing that's actually going to impact your life to tell you whether you're going to get free. But you don't have to. I literally give away like 95% of all my wisdom and knowledge and experience and everything for free. And the cherry on top is just the live daily mentoring where you can hop on one-on-one calls and so on. But you don't have to do that. So it's a free world, right? So if you want to take the value and do it, figure it out on your own, brilliant, amazing, right? That's the whole mission here. We want to impact a million people. And you want me to remove Winston? No. Why? Winston, shall we remove you? I think he looks unimpressed. All right, fine. The Winston cam goes. Yeah, he's blocking the key thing. Well, I wrote out the core numbers for you at the top here, right? You guys get that? I think you guys got that, right? So this is a great bottom indicator. Helps you see the bottom from the front, that sort of thing. And when everybody is really miserable, depressed and miserable and bearish and just horrible, that's usually the bottom of the market. So if you go back a little bit in time, this was 87 here. That was the bottom of the market. In 90, what was that, 3 or 4 or something? I don't know, I'm too young to remember that. Can we get a straight line up? That was kind of the bottom of the market. In 2008, I do remember that. Most of my banker friends got fired and just sat around in cafes with copies of the Financial Times to look like they were meaning to do something. That was near the bottom of the market. And then right now, we're here. And the theory, therefore, being that we are near the bottom of the market. Now, my lines are pretty straight. And you'll see here in 2008, it wasn't the exact bottom of the market, right? We did go a little bit lower, but was it a good time to buy in hindsight? Yeah, you're never going to get the bottom of the market. You're not going to find it. It's impossible, right? But you can be near it. So that's something that makes me feel a little bit more bullish if you are a long-term investor. Now, of course, the next question is going to be, well, what do you actually then buy? And I'll help you answer that by giving you some actual rules, some hard rules that the most successful investors out there in the world have used for decades, and basically teach you how to learn to pick great long-term stocks and therefore retire sooner, retire better, which is ultimately what this is about for most people, right? It's allowed me to retire in my early 40s, and now I get to do this fun thing because, you know, doing nothing is really overrated. And if you have a job, you're probably hoping for that. I did nothing for 6 weeks. It drove me nuts. So doing something that gives you satisfaction, where you make an impact, where you help people, and people send you lots of lovely, nice messages every day. For me, that's the thing that gets me out of bed in the morning. So I'm super happy to always share with you guys here what happens just pre-market, because I'd probably be looking at this, well, I would be looking at this anyway. Wouldn't take me quite as long, but it's a lot more fun with 3,000 people. So if you are enjoying this, guys, smash the like button. Juma, appreciate that. You love the rules. Teach it to my working friends. Also amazing. And that's of course, this is what this is all about. Like share the wisdom, share the knowledge, share the skills, because it isn't about smarts. It's about just knowing what the rules are, right? Now, this is a little bit what I think has me concerned right now. And this is that Trump said basically yesterday, we only reverse tariffs for a short period of time. Nothing is over yet. It's like a bad movie, isn't it? So people were getting afraid, and he's referring to the bond market, right? He's referring to the hedge funds who were calling up going, excuse me, we would just politely like to ask, either you pause the tariffs for a little while, or you send us a check for $1.5 trillion. It's really up to you. So politically a little bit better to just pause the tariffs for a little bit, right? But penguins, I think, are still getting taxed. At least I think so. So what are we going to get back to? Well, there seems to be this trade war cycle here, right? So at the moment, the market rallies on some temporary news that everything is going to be not quite as terrible as before. Then very little progress is made, because most of these people they're talking to are politicians who are used to doing nothing, and who measure their success in activity, not in outcomes, and in speeches, not in achievements, and therefore very little is likely to happen. And therefore, Trump is going to get tough on trade again. The market sells off on the trade war fears. And then Trump says, well, there'll be a solution. 87 people are wanting to kiss my feet this morning, or something like that. And then we go back and round and round and round we go, until eventually we actually get to a real resolution. But we're not there yet. Right? And because we're not there yet, I'm a little bit cautious, and I'd urge you to be a little bit cautious yourself. So why am I looking at gold this morning? Well, gold is something you buy when you are fearful. And it's up significantly this morning. That was yesterday's candle. So we had a nice, big, juicy gap up there. Good for us people who own some gold. But we're going up again. And we're going back to the highs here, the all-time highs. And that means there is still some fear in the market. There is still inflation fear in the market too, although I'll talk to you about inflation in just a second to put all the pieces of the puzzle together for you. So what I want you to check one time per day. Become one of those weird people that check this one time per day. It is the VIX. And this morning, last time I looked, it was up 11%. That is not a good thing. VIX is the fear index, and you want that to go down. Right? Does that make sense? Does that make sense that you want it to go down? If it makes some sense to you, put a V or write VIX in the chat so you understand that. And I show you the actual VIX right here, right now. This is QQQ live. Let's have a look at the VIX. It's still up about 8%. So not really what we want. So we get back to that in just a second here. Okay. Thanks for all the VIXs and all the Vs there in the chat. Brilliant. Now, here is some wisdom from a legend, and then we look at the market and we look at some insanely important inflation data. Bill Gross, he's the guy who founded PIMCO. Have you heard of PIMCO? Massive fund manager. You probably have some ETFs from them. And he says, look, my portfolio of defensive stocks is green, so I didn't begrudge the market. This was about yesterday. But I ask you, would you want you to own highly volatile US stocks whose prices depend on whether the president had a good night's sleep and woke up the next morning to reverse yesterday's policies? And he has a point, right? And this is why the fear index, the VIX, is up so much, because there's a lot of uncertainty out there, right? And I respect this man greatly. He's one of the truly great investors out there. And he's basically saying, guys, just use the bounces to de-risk. And that, in my opinion, is the only reason we're down this morning. It's because people are locking in those profits to just reduce their risk exposure a little bit, because they're worried this is not the bottom yet and that there will be more uncertainty. So they're selling what went up yesterday at a better position than, still up 6, 7, 8% or something mostly. So that's what's happening. It's not really profit taking. It's just like de-risking. And that's what a lot of my mentors taught me over the years, is that when it crashes and you're not out yet, well, you wait for the bounce and then you get out on that, and because it usually goes a little bit lower, then it goes higher. And that's not what you want to hear. But because you want me to just say everything is going to go to the moon and buy this and you'll be rich tomorrow. It's not quite how this works. So I can only tell you what I see and what I do. And right now, with the fear index where it is, the uncertainty where it is, I see significant risk. And let me give you an example. And we're not in 2000, by the way. The market isn't going to collapse like that. But we had a 14% gain here at the beginning of that dot-com bubble burst. And then we went something like 50% lower, okay? So just because you have one great big day doesn't mean a lot. So we got that fake out here, and then we really collapsed going into 2002, 2003. I'm not saying it's going to happen, by the way. It's a bit of an extreme one, but I just want to illustrate to you that these bounces are not necessarily the bottom of the market. You tend to get the bounce before you go a little bit lower. And then what makes this more sustainable is a lower fear, markets calming down, more liquidity, more breadth, and so on. So at the moment, I'm still very cautious. And just use the time to learn and use the time to set yourself up, make that short list of the great stocks that you do want to buy when the market stabilizes, and you can come and join me. You can learn with me on Saturday. I'll put the link in the chat for you as well here, and I'll pin that to the chat, so you can just click on that, felixprehn.org/webinar. It's completely free, and I'll literally teach you what those hard rules are that we look for when we want to buy amazing stocks. Now, after the heat map, if you're somebody who enjoys the stock market and enjoys making your money work for you hard, you can have a look at the dark pools if you like. We put that into TradeVision, which is a software that we build. And there's a free trial for that, so you can just try it out. And this is the stuff that happened like an hour ago, 2 hours ago, 4 hours ago. These are live trades, bigly trades from the big guys on Wall Street, right? This is not somebody in their basement. And all you got to look at is like the bearishness and how few bullish trades there are. So very much, despite yesterday's rally, institutions were dumping. Can you see that? Institutions were dumping mostly. So that's kind of important to get a little bit of a sentiment, sort of finger in the air to see which way the wind is blowing. And I quite like doing that. And that's inside TradeVision if you want to check that out. Now, one more important piece of news I want you to understand. And if you click in to TradeVision here in the top, we've kind of slightly hidden the upcoming events, the data, because, well, we didn't quite know where to put it yet, but we wanted to have it. And that shows you all the core data that's happening there. You can do this for all countries in the world, by the way. I've set it to a US filter, but if you're interested in, penguins or something, then you can obviously select penguin land. And inflation has just come out. And it's come in way lower than we expected. So we're expecting core inflation to come in at 0.3%. It came in at 0.1. We're expecting the headline inflation rate to come in at 0.1. it came in at minus 0.1. Negative, and prices are falling. Right? So extraordinary stuff. And you'd think, therefore, well, lower inflation. Inflation is beaten. We're going to get Fed rate cuts sooner. This is tremendous. Everyone's going to jump for joy. The penguins will be dancing. And then you look at QQQ. This is literally a minute chart. So this happened. Let me get a pen. Let me get a pen. It happened here. Right? So we went up originally, which makes sense. And then immediately we started selling off again. And now we're basically pretty much back to where we started. So the market just not that interested in inflation data here, which is a little weird because, well, I guess they're just occupied by massive tariffs and 100% plus on China is still there. There is more good news, by the way. Europe, the apparatchiks in Europe have paused their tariffs in retaliatory tariffs. So that's good news, pause on tariffs. There is also, I think, some good news so far. Can I spell tariffs? From China. And that is that they have not put retaliatory tariffs on the retaliatory tariffs to the retaliatory tariffs to the retaliatory tariffs. Following me? They haven't. Right? So they haven't responded. They haven't shot back in the last round. And that might be cause for some optimism, because if they did, then Trump would do it again and would just get worse and worse and worse and worse. So there is a little bit of good news all around us. It's everywhere we go, and hopefully that'll get sorted out. But at the moment, I'm mostly concerned about the high fear levels. And yeah, Mag 7 is what basically drove the entire rally yesterday. And if you were to draw a trend line here, it's a bit of a rubbish trend line, but something like that. It's a little off. Hang on. It's probably that. We're kind of exactly at the resistance here. That's the blue line there, the resistance line. So we are lower today. We got to break through that. And what you'll also notice, if you watch my chart videos sometimes, you see that yellow line there? That's the 50-day moving average line. You see the purple line there? That's the 150. And you see that cross? It's often known as this. And you're not just seeing that on the Mag 7s, you're seeing that on the NASDAQ, and you're seeing that on the S&P, and you're seeing that on a lot of stocks. And that's just generally a very, very bearish signal. So I'd love to come out swinging and say, it's all over, folks. It's amazing. Like, let's buy like it's 1999, which actually wasn't good. We shouldn't joke about that. Let's buy like it's 2003. That'll be a better analogy. But we're not quite there yet. We're not quite there yet. There is some optimism, and I put a note out to you guys in the coaching community this morning. There was a lot of market breadth. Most things went up. As I said, the China, the EU thing, the tariff thing is a little bit positive, but it isn't resolved. We still have very low liquidity. The bond market hasn't fully recovered, and we have a lot of fear. And as long as we have a lot of fear, we don't have the stability that we seek. So we're still up about 8% here this morning on the VIX, which is not brilliant. So is my caps lock stuck? That's a bit of a random one. You know what the caps lock button is. Now, what will happen then due to the bond auction? Well, yesterday's was not great, but also not terrible. And I suspect the same thing will happen today. I think it'll be okay. I think the worst is over there of the bond fear thing, but markets have to kind of settle again a little bit before we go back to, fun. US needs inflation in order to pay off debt easier. True, but putting 124% on Chinese imports will, in the short term, import you some inflation. So I think that's not really the biggest concern right now. Now, many people use the 125 moving average line. I've never heard anybody use the 125 moving average line, but I learn something every day. So just don't buy anything until we're back at all-time highs. No, that's not how it works. I'm not saying that. I'm saying if you want to buy now, buy quality. Don't buy the speculative stuff with really high PE numbers because you don't know if those multiples will survive this. And so good companies, and I'll teach you on Saturday, if you want to join me, how to find those good companies. You could also buy the index. If you bought then the S&P and you got a long-term horizon, like most of you guys say you have, 5 years, 10 years, you're going to make money. But you might not make money in the next week or the next month or even the next 3 months. I showed you that data, right? It gets much, much higher probability-wise, the longer time horizon. So if you have a short-term thing and you want to make a quick buck by next week, I just sit on your hands. That's what I do, because it's a high, very high risk environment, this. And for everybody out there pumping whatever stock it is, well, nobody predicted yesterday. Right? I know social media is full with the wizards who claim that they did, but they didn't. So it isn't predictable right now. It is politics and it is government intervention all around us. They cause this, they can uncause this. So we don't know when that happens and how that happens and how fast that happens and what the outcome will be. And we ultimately don't really know what Trump wants to ultimately achieve. Does he want tariffs on European goods, for example? Does he want tariffs on Canadian or Mexican goods, for example? We don't know that, right? Pretty sure he wants tariffs on Chinese goods, but not really sure about the rest of it. And therefore, it's a fluid thing. And the best thing to do, in my humble opinion, is to take as little risk as possible. And maybe nibble if you have a very, very long time horizon. But you'd have to be happy that this could go down another 10 or 20%, right? Because you never know whether it does or not. So I'm just putting that out there. Yesterday was lovely, but this morning people are taking profits. And therefore, it doesn't look quite as good. And we don't know what the White House is going to come up with today, right? It could be great. It could be terrible. Who knows? So while they do that, they keep the market on their toes, and the VIX is at 35. I am going to continue to throw a ball for Winston. He enjoys it. And there he is. Winston, you're a little out of shot. There he is. He doesn't look too worried, does he? I think he looks... that's basically what I'm suggesting you do. Is take a long nap, check on the VIX once a day, come and learn with me on Saturday so you're better equipped to find the amazing stocks that are going to rally. There's going to be the most beautiful rally in the world. Trump has promised it, and it's coming. It's going to come. We just don't know when it's going to come. But you want to be set up for that. You want to have some rules as to when you buy and what you buy. And that's my premise and promise for you for Saturday. So join me there, felixprehn.org/webinar. Should be stop loss. I would always have a stop loss, but that's a whole different conversation. One happy dog indeed. Take advantage of the recovery. Yeah, Winston is a pensioner. He has no issues. That's true. Scott, you're very kind for sharing that. He's saying there are unlimited landmines out there. Being in Felix's community has been my best indicator here, because I have no idea where to find all this info. Appreciate that, Scott. And look, for me, that's what it's all about inside the community, is like giving you access to experience. That's really what it's about. And all of my mentors have tremendous experience because they've worked in hedge funds or big investment banks, and therefore they're in a better place to guide you than the noise on social media, right? How old is Winston? I want to say about 7 or something like that. Winston, how old are you? Let's open his eyes at least. I think something like that. We adopted him. I'm not entirely sure. Now, no worries, Winston. Rest easy, Winston, indeed. Now, my guess is Trump doesn't want factories. Okay, if you want my conspiracy theory, he wants my conspiracy theory. Put a C in the chat if you want my conspiracy theory on what this is actually all about, because I don't think it's about what people actually say it's all about. But you'd have to be willing to listen to about 1 minute of my take on this. Anybody wants to know that? Put a C in there. Scott says C. Christopher says C. Miguel says C. If we get more than 10 C's, then I'll have to tell you. Oh dear, we're approaching 8 C's. Okay, we're at 10 C's now. Oh dear. So basically, my theory to this is that, okay, the US can't actually manufacture all the stuff that's being made in Vietnam and in China and all these things. You don't have the number of people. You don't have people who want to do those jobs. So kind of begs the question, then why put on the tariffs, right? Well, what would be the solution to manufacturing all this stuff at a reasonable cost in the US without people? Who could do it? Immigrants? There isn't really any appetite for that either. So who could do it? Robots. That's honestly where I think this is going. And we already have functioning robots out there. Amazon has almost 1 million of them, right? Tesla is going to have a couple of thousand working in their factories. And there are already loads of robots working in factories. They don't need to look like humans necessarily. They just need to do the task and the job. And AI allows us to teach robots to do much more complicated moves than, the kind of car factory robots do. Like, for example, you build like a car, right? There's loads of cables in that. Those big robot arms, they can't do that. So people crawl into the car and they draw cables through. Very inefficient. Now, a modern robot can actually do that. So I think this is where this is going. I think this is going to a robotics revolution, which will be the equivalent of the Industrial Revolution. Now, will it cause mass unemployment? Well, interestingly, not necessarily. Certain industries, yes, deliveries and trucking and that kind of thing, taxis, and they'll get pretty hard hit, Uber drivers. But if you actually think about that, all of this stuff isn't currently made in the US, but you could make it in the US at a very low cost because you'd have these robots that work 24/7, 7 days a week. They don't take holidays, so they don't need a pension plan, right? They're much, much cheaper than people. Then you could actually make these things at a pretty good cost. And it wouldn't necessarily destroy jobs because these jobs are not presently in the US. So I think this is where this is going. And if you look at the guys who were standing next to Trump at the inauguration, who are the billionaires who were there, right? Bezos, one of the biggest robotic investors, right? Tesla, Elon, one of the biggest robotics investors, right? And then you got Meta, one of the biggest AI investors, right? Zuckerberg. These guys were all standing there, and they've obviously given a lot of money to this, political movement, and their businesses are going to tremendously benefit from it. So that's my conspiracy theory on this, that it's actually intended to make it commercially viable and encourage these companies to spend billions of dollars to build out robotic capabilities and factories, get huge loans, get grants, get tax breaks, the whole lot, to make the US into a fully automated manufacturing base. Because you guys just don't have the people. And even if you do have the people, they just don't want to do the job, right? Factory work is pretty miserable. Have you visited a car factory? I have when I was a teenager. I thought, wow, it was a Ford factory in the UK. I was like, this is pretty, was it GM? I can't remember. It was very monotonous, right? It's just not really a thrilling thing to do. So that's where I think this is going. So I think robotics investments is going to be something that'll make us a lot of money, probably in the second half of the year or maybe 2026. I'll keep you abreast with that. So that's my view. And obviously some people say that's never going to happen because like when you say, self-driving is coming, people say, no, it'll never happen. People will never give up their cars and stuff. They will. Maybe not you if you really love driving and you've done this for 30, 40 years of your life. You're kind of happy in that space. But there'll be a lot of people who will, a lot of younger people who don't care to drive. Like I have a driver, right? So for me, I don't drive that much. So the car drove itself, would it be better? Well, probably. I mean, my driver's a lovely chap, but the car would have more space and that kind of thing. So I think this is coming, and it'll come in manufacturing first because that's where it's most easily going to be accepted. That's my view on that. So Winston doesn't seem too impressed. He doesn't want robotic dogs. Now, volatility still up 6%. It's a slight improvement here. So the market's now open. Let's have a look at the QQQ. It's down 2.45% from yesterday's rally. Probably mostly profit taking. People want to lock in some of those gains so life doesn't look quite so horrid. And Mark 7s, also down 1.9%. Not horrendous, but a little bit down nevertheless. Let's look at NVIDIA. That's down 4%. Let's look at Tesla. That is down 4%. That seems to be the golden number this morning. What about some of our other tech friends? Palantir is down 3%. Still looks like one of the stronger setups here that we've seen quite honestly. SoFi is down 3.8%, which is weird. We just got the lowest inflation data in like 5 years or something, and finance stocks aren't flying. It's very, very odd. So how will people support themselves if robots have all the jobs? Yeah, it's a good question. Well, if you think about the jobs that are presently in, say, Vietnam, if you move those to the US, they don't actually steal jobs. They're kind of additional jobs, right? But yeah, there will be a lot of repetitive jobs that'll go. And I think, trucking and deliveries and warehouse workers and those kind of things will be the first obvious ones. The dangerous jobs will be the next ones. So, mining and maintenance of high-rise buildings and, all that kind of stuff, that'll all go. You still have some people to oversee it, and there'll be more like engineers and software engineers and that sort of thing. So yeah, it'll cause a problem for sure. Like every major industrial revolution has. Like I remember when I grew up in Germany and in the UK, and when the mines were closing, that caused unemployment for a generation of people because that skill was no longer required. Economy grew overall, but it wasn't good for those people. And it'll be the same for the truckers and so on. And that's really why I always say to people, guys, like you gotta learn to make money your business, because that'll never go away, right? The world's greedy, and money will always be there. And if you learn the rules and if you know how to make your money work for you, then maybe you don't have to. And it's a satisfying thing to do. It gives you time freedom, and then you can do whatever you want with your life. And I think, honestly, that's just my advice to people. It's just like plan to retire really early, because that way you escape that system, and that way you get to control. So that's really what it is. So maybe that means working a little harder for a little while, but it's ultimately worth it. Like, at least from my experience, I've been there, I've done that. So, universal income is coming. Yeah, for sure. I mean, it's kind of already here, isn't it? I feel like it's already here, but yeah, it's coming. Cheap labor countries still have a role to play. Yeah, it's not 100%. I mean, I don't think the US is going to make straw hats or something like that. I'm not suggesting that. But there is a lot of stuff that could be made in the US that is presently not made in the US if you had automation and robotics, right? Phones, technology stuff, that could all be made if there is a will. And I think it might come. I mean, Trump might fail spectacularly, or he might succeed. And I think then that's the future I sort of see. So that's kind of the way I'm looking at it. So if there's mass unemployment, yeah, I'm not sure there necessarily has to be, Andrew. I don't think there necessarily has to be. It's like when, the steam engine came in and factories became 10 times more efficient, a lot of people lost their jobs. Farming, right? That was all done by hand, and suddenly it became automated, and it was machines. And you're seeing that again, right? You're seeing farms now being run by autonomously driven tractors, or whatever you call them, combine harvesters and so on. There are no longer people in them. And yeah, it does eliminate jobs, but it does also create some other jobs somewhere else. But the problem, of course, is it's not necessarily a job for the same person. But as an economy overall, it tends to grow, it tends to do better. But I hear what you're saying. I'm not saying it's going to be pretty for everybody, but I'm just saying that doesn't mean it isn't going to happen. Ultimately, profits is what drives the world. And if you are an Amazon or a Tesla and you can make your products, deliver your products, ship your products with, say, 80% less staff, you think you're going to be more profitable? If you've got robots who work 22-hour shifts, a little bit of maintenance, 7 days a week, no holidays, no holiday pay, no sick leave, no vacation, no pension plan, no medical, nothing, right? That is going to make those companies much, much more profitable. So who's going to benefit from it? Well, those who have assets, those who have stocks, those who have stock portfolios. So the wealthiest. So you can rant against that and rave against that, or you can just go, well, all right, I'm going to join them. And I think that's the pragmatic thing to do, because ultimately your family will thank you for it. So that's, I think, what it's really all about. So my goal for you for a Saturday is to teach you exactly how to pick those great companies on the real basis of that. So come and join me at felixprehn.org/webinar, and it's completely free. We'll probably do about 2 hours or something, including a massive Q&A. And my intention is just to give you the rules, set you up so you can come out of this crash. It's still a bear market, it's still a crash, and come out a winner, come out swinging, and come out confident and in control, so you actually know what you're doing. That's really my goal for you guys. So come and join me on Saturday. felixprehn.org/webinar. I'll put the link in the chat again. And there it is. And I wish you a beautiful day. I thank particularly the 700 of you who clicked the like button, the other near 4,000. Winston knows who you are. And I look forward to seeing you live tomorrow. If you'd care to join me, same time.